All right, so I know that Red Panda wanted to kind of get a better understanding of support and resistance levels. Um, Very important with charting. It's not the end all game to be successful, but it certainly helps people understand how to read charts, and no one's probably a good time to get in, good time to get out. Again, not perfect, but a good way to protect yourself when you understand how to read charts. So first, go ahead and draw some stuff out here, and then I'm going to explain it. So, all right, so oh shit, that's not what I wanna do. All right, so these bottom levels here, um, very simply, they're support, right? So um, the way I define support is strong support, right? So there's weak support, there's strong support. The way I define strong support is if something stops a trend, right? So um, you can look from this top area. I'm going to draw this line downward, right? This is a trend down, right? All of these levels up here, like this particular one right here. Let me actually get this going. So these two that bounce off of this is what I would call weak support because it doesn't stop the trend, right? So the trend stops down here, right? So when the trend reverses to the opposite direction, that's what you would call strong support, right? It's pretty simple, I think. So understanding a downtrend, understanding weak support inside of a downtrend, and then understanding strong support that reverses the trend, right? Let me see if I can find another example. I think gold actually got quite a few. Yeah, this one.
What timeline are you looking at?
So this is 1 year, 1 day candles.
All right, thank you.
And this is kind of my favorite because um, I can see gaps. That's one of my favorite things to trade off of, or at least when I see a gap, I generally start really paying attention to it. You know, when something fills a gap, it's like, okay, now we're going to start looking for a support level underneath that gap, and that's usually a good time to get in, or at least good time to start building a position. All right, so let me just get rid of these trend lines. All right, so we've got gold here. This is Barrick Gold Corporation, a mining company. So very simply, you've got this trend, right, from the very top to the very bottom. Right? And when it reverses, it stops that downtrend and starts to come back up. This down here is going to be your strong support level, right? Right here. There you go. Right? So this is going to be major strong support. So if for example, this stock were to head back down, this is going to be where I would potentially expect it to bounce. It depends on the market. I mean, you know, there could be some underlying stuff that would make it go past that. But generally, when something happens where you've got a trend reversal and then it starts to move back up and then the stock price comes back to that same level, it's probably going to bounce off of it. Again, I'm going to jump back to Fastly because it's literally done that, right? So you can see here this bottom trend level, and it did go below it, but not much, right? I've got multiple levels that are generally on this support area, right? So it did jump below this just slightly, and then you've got 1, 2, 3, 4 areas that have basically initiated this level as a strong support level. So anytime the stock price goes under this, for example, I would add to this position or start building one. All right, so I'm gonna go back to gold. right? So in the same concept with uptrends, right? So if something's has reversed, goes up, this this is a resistance level, strong resistance, right? I would anticipate next time the stock gets anywhere up near this, it's going to have trouble getting through it, right? And you can even see a level over here to the left that is very close to it, very, very close. So I would honestly say that's your strong resistance level because you've got two levels intersecting, right? So anytime you've got multiple levels touching the same resistance point, that just makes it stronger, right? That makes that resistance much stronger. So anytime you see, again, if this stock starts to pump and hits this area up here, I'd say that's going to be a very tough area for it to get through, right? And this stock has been up to 27, in 2020. So it's going to have a hard time getting through that. You guys have any questions so far?
No, not yet.
Okay. Now, I'm gonna go back through weak resistance, weak support, right? So let me clear this. Okay. So this right here is weak support. This right here is weak support. Again, it's weak support because through the uptrend, it's just a continuation, right? And when the trend comes down, the weak support, it can't stop the trend. So weak support up just means that it's just a continuation of the trend, whereas weak support coming down, let me get rid of this. Weak support coming downward means that it doesn't stop the trend, if that makes sense. So you got two different directions of support. And same concept here with resistance. All right, so I'm going to remove this again. Right here is weak resistance, weak resistance, weak resistance, right? And the reason it's weak, again, is because it does not stop the trend. It does not reverse the trend. The trend just kind of bounces off of it and then moves back through it. Bounces off of it, moves back through it. That's going to be weak resistance. Now, you can honestly see on the other side of the trend down on this side. Let me get another draw tool here. This whole area. You can see how it intersects with two different points, right? So this weak resistance and this weak support intersects with this whole entire time frame. That makes this stronger. Right? That's why it's kind of bouncing here. That's why it kind of went sideways here because you've got multiple levels. And I would even honestly consider this point to be resistance and support because it did some resistance, but it also created support, right? So when the trend was going up, it broke through this area. It kind of went sideways at this resistance and then broke through. Next time it came down, it bounced off that same area, right? So when you look at resistance and support, when something breaks through, say, resistance levels, like let's say something breaks through this top level at 25 bucks, 25.37, something breaks through that, it now becomes support, right? And vice versa. If something breaks through this 1756 area, it goes through it downward, that becomes resistance. Does that make sense? Any
Yeah,
questions?
yeah, it does. No.
Awesome. Okay. So, I mean, I think that's a kind of a crash course on support and resistance. Very helpful to understand how to see this on the chart. Then you can kind of understand what's going to happen with um, the stock itself and how it's going to potentially react. Right now, again, this isn't going to be something you can go in here and be like, oh, there's support here. I'm gonna get in. It's gonna pump. It doesn't always work like that, unfortunately. Let's see. I'm gonna go over Fibonacci. Um, so again, I'm asking more time. Does anybody else have any questions before I move on? I don't want anybody to be confused or a little bit, kind of not completely understanding. I'm happy to try and make it as clear as possible.
I'm good. I'm good.
Okay.
I don't know about anybody else. I don't want to speak for them.
Yeah, I'm all good too.
All right. So Fibonacci, I love Fibonacci for the fact that
Good here.
awesome. Okay, so I love Fibonacci for the fact that it's every time I've ever drawn it out, I'd say it's 90% accurate, right? So the way you use it, you start at so I call these waves, right? So first, let me explain. This is a wave. This is a wave. Right? Now I've got another wave here. It'll fucking draw. Come on. Yeah. So this is a wave. This is a wave. This is a wave. All right. It's basically the whole entire trend. It's a wave. So whenever you can identify the wave, which is pretty easy, so from the very bottom, the lowest low on the chart in this particular time frame to the highest high, that's your wave. And then you start from the highest high, go to the lowest low, that's your wave, right? So with Fibonacci, you basically just draw it off of that, right? So start at the bottom, go to the top. And yeah, I used to say the bodies were more important than the candles, but over the past 6 months to a year, I've found that the price action is the most important thing. So wherever the wick goes, that's where you draw. That's how you do your trends. That's how you do um, your Fibonacci drawings. I still kind of, when it comes to support and resistance, I still feel as if the bodies of the candles hold the most weight, and I use those. But if it breaks through that, then I move to the wick. Right, so in this scenario, um,
Hey, before you go further, are you always are you on the daily chart when you're doing this
you can do this on any time frame.
for your Fibonacci?
Yeah, so you can really do this on any time frame. So here, a matter of fact, I'll show you. I'll show you. Let's see, this is 2 months. So I'll do like maybe a 60-day. Let's see what a 60-day looks like. Yeah, perfect. Okay, so this is a great example of you can do it on any time frame, right? So start here. I'm gonna draw. So wait, first, let me fix that. Yee. Well, so I'm gonna do this first wave, right? Just so you can see where this bottom area lines up. And I would say that 61.8. So it's definitely, so the 61.8% Fibonacci level. So this jumps, moves up, hits a high, and then starts to retrace. When I see something like that, doing that retracement, you want to draw this Fibonacci from the bottom to the top, and then you can kind of get an idea. So like let's say the stock currently is here, this little red arrow, right? You see that it did this jump, and then now it's like creating a lower high, and then potentially it's created some lower lows below this area. So you would draw the Fibonacci from here to here, and then you can say, all right, what level would I expect this to bounce? If it's still in an uptrend, what level would I expect it to bounce at? All right, so um, the higher, like the 23.6 and the 38.2, those are more along the lines of a continuation bounce. Whereas a 50% retracement, which number one is not a Fibonacci, it's its own indicator by itself. But because Fibonacci, they added it in there, you can utilize the Fibonacci drawing to utilize the 50% retracement. So with that being said, the 50% retracement is a very strong level. If something bounces off that, this is like your strongest um, continuation level. So when something hits the 61.8, it's more along the lines of it's a 50-50 chance it's going to keep going through it, or it's a 50-50 chance it's going to bounce off of it and create some real strength, right? So in this scenario, so you can see here, it went through it, then went back above it, went back below it, kind of touched it again, went below it, and then jumped through it. Right? So you know this level's strong because of this price action, right? Not, it doesn't always just touch here and then bounce. It'll do things like this, right? So, you know, with the stock market, nothing is exact. Everything is general, right? And this is a perfect example of a generalized 61.8 retracement level, right? So stock jumped up, it fell, it dropped the Fibonacci, it bounces to 61.8% retracement, right? So, and then it continues, right? So that's an example of you can do it on any time frame. The longer time frame you go out, the stronger that level becomes, right? So when you like, that's why I like to do 1 year, 1 day stuff, because it helps me understand more of a. It helps me look at the ticker symbol as a in a holistic position, right? From a view that's further out. When you see something like that, you see more things, more concrete information, right? So the short time frames, you're only seeing these levels, right? You're only seeing this wave. If I go further out, I'm able to see previous waves. I'm able to see much stronger support resistance levels. Like here, like, so let's say it jumps above this 2119 level at the top that it created. Well, I can't see anything else. So in this 60-day time frame, I'm basically seeing this saying that's the strongest level that it's got to break, and then it's to the moon. Well, no, actually it's not, because when I go out further to the 180, oh, okay, now I'm seeing the 2192, right? Or even potentially this level at 21 and a half, right? So that's why I always say you can do short-term time frames, but always give yourself that added advantage of looking at further out to see, like if you're trying to scalp something or swing something for a week or two, you know, you can get a good idea of saying, all right, well, when it hits 21 and a half from this current level at 19 something, that's going to be where I want to get out, assuming that it breaks this 2104, right? So, all right, with that being said, we're going to draw out the Fibonacci on this time frame, right? So instead of only doing it on this first wave and this retracement, we're going to do it from the bottom to its most recent high. All right, so let's go here. And it doesn't really matter where this point goes. You just want to have the very top line intersect with the high. Again, here we are at the 50% retracement. You see how it gained strength there? Let me zoom in. You see how it gained strength on that 50% retracement level, went up, now it dropped below it again. I think this is going to bounce off the 61.8 again. I think it's going to do the same exact thing it did on this level. It's going to do it here, right? So again, this is one big wave. Since there is no trend reversal, we just got weak support, right? So now we're at the 50%. Again, it's
That
created.
drop down was probably the COVID scare.
Sorry, what's that?
Was that drop most probably from the COVID scare on Friday? Was that Friday daily candle?
Yeah, this is definitely Friday. Yep, that's the last open market day. Most certainly that is going to be.
So
that looks like the.
if not for that, then it would have definitely bounced off the 50. And all right,
Yeah, I
kind of
mean,
an anomaly there, though. Correct with Friday.
well, I would say it's an anomaly in short-term thinking, but when you think of the market as a whole, the market has cycles, and there's always an expectation for the market to react in a certain way at some point, right? So, as an example, like let's say we're in a bullish market, and then we've been in it for 2 or 3 months. The cycle is that it's going to turn bearish without question. It always does. Now this year has been a little bit tricky because with inflation and the continued COVID and then all these new policies, plus you've got oil doing crazy shit. You've got a lot of geopolitical turmoil going on. So there's a lot of things that have been happening this year that kind of make the market really tough to pin down. But generally speaking, like this month, December, January are typically bullish months. Now this new COVID thing that came out, I personally think that it is manufactured, right? I think it's manufactured in the sense that the governments have created it, and now they're using it as an example or a reason to make changes and stuff, or to pull markets back, or to example attack crypto, right? Maybe crypto's been going too hard for too long, and they want people to get afraid of crypto, so they're going to throw out this new COVID thing, and then crypto starts dying, and people start to get afraid of it because the government doesn't want them in it. The banks don't want them in it because it's basically an area where they can make money without the government really knowing, right? So there's a lot of reasons why I think this stuff happens, and you can't really pin the tail on the donkey here. But uh, in all, to make this pretty simple, um, you can really truly see here how it bounced and it gained traction for these 2 days on that 50% retracement, right? So it's perfect. Now, with gold and silver, I fully expect this to gain some strength. So I think maybe come Monday it'll fall a little bit and then it'll jump and it's going to break this high, right? It's going to start creating new highs because with fear and uncertainty, people start moving into gold and silver. That's just kind of traditionally what happens. Um, they've attacked crypto, so I could argue that crypto is one of those safe havens in a way. People have feel safe in crypto when it comes to inflationary um, situations. Um, and again, there's a cycle that happens in the market, right? So crypto's being attacked, the market's getting hit. Gold and silver is in a new run, right? This whole entire wave right here, this is a new run. It bottomed out at 1756, and it's definitely in a new run, right? So check this out. This is how predictable um, all of the gold and silver are with one another. Let me just get rid of this stuff real quick. So this is a miner. So I'm gonna go to the actual ETF of gold. Now it's not as clear as the miner, but you can see the bottom here and the wave. You can see where it did its first retracement right here, and you can see it retracing here, right? You can clearly see that. So it went up, retraced down, went up, retraced down, and I guarantee you Fibonacci is going to be real close to the same numbers, right? So let's just draw it out to see. So we're going to start this first one. We're going to draw it here. Fuck, look at that. Look at that. 61.8. Right there. Almost identical, right? Let's go back out. I'm going to draw it from here to here this time. See, now this one is at 61.8, right? So, and you can see that it did a big, massive jump, and then it fell again, right? So it closed down here at 166.83. And the reason why it did this huge jump, in my opinion, let's zoom in, is to fill this gap. It created this gap, and then the price action wanted to fill it. So it filled this gap with price action, and now I believe it's going to probably come back down and then jump up and start to fill this gap. These are very short-term gaps because the trend is up. It gapped down. The trend is up. We're going to fill those gaps pretty soon. All right. And I could go to the SLV chart and look at that. Almost identical. All right. So you could trade any one of these, and they're all going to be relatively the same, right? So let's see how our Fibonacci looks on this. So that one bounced off the 50% level. You see that? And then if I draw further up, it's at 61.8% level. So I mean, it's so obvious how these things react to the Fibonacci. It's insane. Like I think there's some kind of institutional method that works with the Fibonacci. for some reason. Right? So Fibonacci is really powerful if you know how to use it. And again, not one of any of these methods is the silver bullet, but if you can figure out a way to create a bunch of methods to come together, you might be able to find the silver bullet if you're lucky. It just it it puts the odds in your favor is basically really the gist of it, right? So we're more or less looking at statistics right now, and the statistics say that the more you have to go in your favor, the higher chance you have of profits, or the higher chance you have of making the right choice based off of what you've analyzed in the chart, right? Now, I'm going to talk about gaps real quick because there's a bunch here as well. Let's get rid of this. Before I move on, you guys understand Fibonacci? You need me to kind of go through any more? Or?
I'm on the same page so far.
Sweet. Okay.
Yeah, I'm good. I understood them where other people had drew them, but I didn't understand the exact place where to, start and stop. So that helped me out a ton.
Sweet. Awesome. Okay. So I'm going to draw some gap areas. And then we're going to kind of go through those. And with gaps, it's price action. I'm drawing through some of these wick areas, but let me get rid of that actually. But generally, you're going to expect the gap fill to have price action, not just the body of the candle. All right, so out of all of this, there's one gap that has not filled, and it's this one here, above 25. Right? Oh, here's one, very recent. That one's going to get filled very soon, in my opinion. Okay, so as you can see, let's start on the left. So this created this massive gap and then gapped again. Right? So when in this particular scenario, when something gaps up and then gaps back down, it fills that first gap, right? But the second gap, when it created the one it created when it went down, that needs to be filled. And as you can see, it filled it right here, right? So then we fell, it gapped again right here, and you can see that it filled it eventually, right? And then jumps up, it falls again and creates this gap that has not been filled yet. Continues falling, creates a new gap. It doesn't get filled quite yet. Another gap, and then the price hits a bottom area and starts to fill these gaps. So it fills the first one, but not completely through the second one, right? And then it falls again, creates a new gap, hits a bottom, and this little gap here. It filled that gap absolutely like the next day, literally. So it gapped down that day and then filled it the following day. And as the price moves up, now it fills this one, right? So, and again, this one as well. So this one was created on the downside. It filled it here, continued up, filled this one. So now we're falling again, created a new gap. And now we're going to start to look to have this thing come up here and fill this gap at some point. Probably going to hit some resistance areas though. I would imagine we're going to probably get some resistance at 24 and it's going to drop again. And then another resistance point maybe right before this gap at 24.5, 24.65 is going to drop again. And then at that point, you're going to see this probably fill this gap. All right, so matter of fact, I got actually quite a few here that I had gaps on. Let's see. Uber. I know Uber off the top of my head has one.
It's so awkward. It's like the bottom half of the screen share is perfect, and then the top half is fuzzy as hell.
Shit.
I can read everything on the bottom perfectly, but the top left, like the ticker and everything, I can't read shit. It's fuzzy as hell.
Oh, that's terrible. Well, and I'll tell you this. In the future, we're probably going to be using Zoom so that we can, because the screen quality is a
Oh,
lot
it
better.
just cleared up. It just cleared up.
Huh? Okay.
What'd you do?
I didn't do anything. I did nothing. All right.
Interesting.
Yep. Super clear now.
Awesome. Well, here's the good news. My screen recording is absolutely clear. So if there's something that you couldn't really see clearly before, you'll be able to go through the recording and see it clearly.
Yeah.
Okay, so this is Uber. You see this massive gap.
Mm-hmm.
All right, I've got an alert set here for it to text me when it fills this gap, basically. So it jumped up. It did a bunch of jive. Create a small little gap here, as you can see. Filled that one pretty quick. It comes down. It tried to fill this gap, but it didn't. So here's a perfect example of resistance becoming support. Right, this level right here. Excuse me. I'm going to draw a rectangle on it. You see these 3 points? That's resistance acting as support because the price is above it. Right? And as you can see, it intersects perfectly right here.
Yep.
Perfectly, like to the freaking penny probably. And then it jumps. So, and as soon as it jumped, it created a gap. Check that out. And now we've filled it. And I can almost guarantee you with this new whole COVID thing that is manufactured, in my opinion, we're going to fill this gap. Uber will come to 36. And honestly, it might even, it's probably going to hit 33. And yeah, I'd say 33 is going to be the number because let me get rid of this so I can show you clearly. 33 is going to be the number, in my opinion, because we've got multiple strength areas over here. Right? Now the support resistance levels, they don't necessarily have to be exact, especially if you have levels that are intersecting with it like this. Right? So, I mean, this is a great example of resistance acting as support and support acting as support. Right? So this whole area, and again here, and here, you see how it kind of just, it kind of goes above and goes below, above and below. Like this area is key, right? Got another area right here, another one here. This one I could argue that this one's close enough, and this one. So that's a lot of areas to act as support. All right, that's 1, 2, 3, 4, 5, 6, 7, 8, and then I honestly go in and say days 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. I mean, you get the point, right? I mean, there's just a bunch of days that this level has been either tested, used as support, or used as resistance, right? So this makes 33 absolutely like massive. Actually 33.19 to be exact. So I'd say Uber, when it comes close to that, it doesn't have to touch it. It could be 33.30. It could be 33.50. It just got to come close to it. Let me zoom back out. So it's just gotta come somewhere near it. It could wick down to it. It might not even have a body close at it, but it could just literally wick to those numbers and then bounce right back up. All right, so that's what makes this area super strong, and I would put my money on 33. Matter of fact, I will. If I see this, I will put my money on 33. So as soon as this number, this 33, blah, can't talk. As soon as 36 gets triggered, I'm going to set another alert for probably somewhere around 33.50. And then I'm going to check out the price action. And if it looks like there's a lot of selling volume, I'm going to wait to get in. If it looks like the selling volume is dying off, then I'm gonna probably start building a position on that. Right? Any questions?
No, not right now.
All right. I can let's see. I'll do one more gap. Let's see. Let me find one here. Space. Yes. So I'm in this actually. I am in this. Draw. So you can see very clearly this gap was filled, right? And it created this gap a long time ago. So this is the key with gaps, though, is you really can't put a time frame on it, right? So the only way that I could say that a gap will fill sooner rather than later is if it's uptrending and then it gaps down and it doesn't break a low and then starts to move back up. That'll be filled really quick. But in this scenario, so it created this gap down here at $17 roughly. 1706 looks like it's the number. Actually, no, 1728. That's where my price level's at. It gapped up. It looks like it even gapped again. Price flew, gapped again. And at this point, it's like there's way too much buying happening. It's oversold. So the expectation is for anything oversold is going to start coming back down, right? I can easily tell you with these charts with things that have already happened in the past. Look, what goes up must come down, but it's not always the case. Tesla, good example. But with this one, I knew. So I saw this. I was in the market this day. I was watching. I wasn't in this position, but I watch space on the regular because I know how it moves, and there's a lot of money to be made. I saw space do this, and people were saying, "Oh, you know, space is going to keep going. It's going to keep mooning. I'm going to get in these cash secured puts, and I'm going to sell puts against this and take in this $800 premium at $50 or at $55." Right? And everybody that said that, this was in an old server, they were all saying they're going to do that. I'm like, y'all better not do it. I'm telling you right now, you better not do it. There's a gap. There's a gap, and it's going to fill. You know, it created that gap with a lot of velocity, and then the candle after is just massive. Expect this gap to fill pretty quick. And I mean, again, I can tell you all day by looking at this chart. You know, look, it did it. But um, only if you were actually there around hearing me say it, you would truly believe it. Maybe you do, maybe you don't. But perfect example of a gap fill. Right, so he had this high, and it had a lot of volatility here, and then it just started dumping, massive dumping. Right, and the thing here with determining trend, and I'm going to show you exactly how to do that. But you can see that the strength ended on this really dark blue candle here, and then started downward, filled the gap, and space always fills bottom gaps. Always. I mean, I'll show you 3 years. Actually, that might be too much, but let's try back to 2 year again. I think 2 year works actually. Yeah. Okay, so where are you at? Right here. Let me draw it. All right, so you see that little line in the middle of these two. Let me actually get rid of this one. Don't need it anymore anyways. I don't know if I really need that one either, but all right, whatever. So you can see this thing filled a gap. All right, so it tried to fill it initially, and it didn't. And I would have been like, oh, it's going to fill, because I'm pretty confident with gap fills. So I would have been faked out on this one. All right, so it did its big jump, and then it came all the way back down and filled it then. All right, you see, clear fill. And then as soon as it filled it, you know, I'd say, what's this, days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 or so days, and then ripped again. I have a full expectation of this happening very soon. That's why I'm in it. I got $3,000 in space at the moment. And I don't go too heavy, too full degen on some of these. I mean, you know, this is a retirement account that I trade this stuff on, so I try to be a little bit conservative. My portfolio is like 105 to 110,000, give or take, on a good or bad day. So you know, $3,000. Actually, take that back. It's 3 accounts that are 105,000, and I've got 3 positions of $3,000. So typically I won't go that deep. Typically it'll be like 1,000. I'll start at 1,000 and I'll start adding, $100 to $200 at every support level if it keeps going down, so that I can get in, a bunch of positions, with $1,000. And I typically like to do up to 15,000. I don't want to be 50% in any of my accounts. So, and I mirror all three accounts, two Roths and a traditional IRA. One's my wife's, one's mine, and then the traditional is mine. So, I try to mirror them so that there's not, God forbid my wife's like, oh, you're making more money in your account, not mine, huh? So I'm not gonna go down that road. But you can see here this gap fill, it did it really well and then ripped. And again, we're in a gap fill right now. Actually, just recently filled a gap. Right? Just recently filled this gap. So I'd say it's been about a week now since we filled it. And look at this. There's a support level, and it looks like it could be gaining strength there. However, I believe personally that we're gonna see it probably come down to the $15 area before it finds its huge rocket boost. And I'm gonna add more to it personally. So these are great ways to uh, trade shares. Right? Options, it's really a different animal, a different beast. So if you're doing options, there's a lot more of a checklist, I would call it, that needs to be worked out, in my opinion, before you start doing that. Right. So I'm gonna
So hey,
explain.
that the gap you're talking about, was that the one right here on the 14th to the 15th?
Yes,
And you're
right here.
thinking it's going to go down a little bit, but go back up.
Oh yeah, I fully
Point
believe.
at it again. I'm a little lagging.
Yeah. Okay. So this gap filled on let me zoom in. Complete fill on the 18th. Looks like. Yeah, 11/18th it filled it. So over a week ago, I'd say it was at.
And that means where the price ran from the top of the gap to the bottom of the gap. That's what you're saying.
So when it started its uptrend here, it created this gap down here at the bottom. So it did its whole movement,
Mm-hmm.
and then now it's retracing itself all the way back down to this gap, right? And when it fills that gap, finds support, then it's going to start to, at least in my opinion, it's going to start jumping again. Right? So it's consolidating. It's finding less and less seller volume, and at some point, the buyers are going to come back in, and they're going to control this this ticker. Now, I expect it to be sooner rather than later, but with the whole new COVID thing, who knows? I might be sitting here for a month before this thing takes off. It might just go sideways. It might jump around like a kangaroo in this $15 to $17 range and then take off. But I'd say this $15 area, it's like crazy strong. Um, there's multiple levels that touch this point, right? So right now we're at a support level, but I think it's still got potential to go down further. Another dollar and change, $1.50, give or take. But I'm not going to wait around for that to happen. Like I said, I started building a position, so I'm gonna continue adding to it if it falls further. And again, while we're talking about gaps, leave that one there. Here's a gap that has not been filled yet. Here's a gap that has not been filled yet. So my action plan here, um, when I start, so when this starts moving back up, my action plan is, what I got? I think I got 200 shares, something like that. 200, 210, 220, something like that. When it hits this $30 mark, right, the start of the gap, I'm going to probably unload half my position right there. And then the rest of it, I'm going to put a trail and stop loss. So I'm going to let it run further. and then whenever it retraces a certain amount, it's going to exit. And I fully anticipate. So the way space moves, I mean, you look at this. Look at all these candles. This shit is just insane. I mean, it's massive, right? So um, once you start seeing, well, you guys don't have you probably don't have these colored candles. So like this is a script where it shows the standard deviation in the
We got them.
candles. Oh, you got them.
We got
Okay,
them.
sweet. So you
I
start
ain't got
Yeah,
it.
seeing,
they got them. They're posted in. They're posted in this education tab in the TOS scripts.
Only one
sweet.
of them worked for me.
Well, we can probably try and figure out how to fix something.
Yeah, no big
Yeah,
deal.
we can get them to you. Hey, no, what you need to do is message a guy on here named Brofessor. He's got it all written out how to do it and all the scripts and everything.
Okay, awesome. Appreciate it.
Okay, so and I can only talk in space terms with this particular ticker. When you start to see it create candles like these, or even a big massive one like this, that's when you know it's getting ready to start reversing, right? I mean, so if I'm in this position, like if I'm in over here on the left, and it starts to create this first Cheyenne candle, I'm probably going to get out there. I'm not going to wait around for it to jump all the way up here, or I could set a trail and stop, right? But I'm probably going to get stopped out pretty quick because of look at this huge wick. I mean, hopefully this thing opened up, jumped up there, and then wicked down, right? If it jumped all the way up there and then started wicking down, I'd be stopped out somewhere at this high, right? That's really what I'm trying to make happen here. So I wanted this thing to start jumping, and then it has really big, massive increasing in volume to the upside, jumps way up, and then I've got my trail and stop set, and then it starts to come back down. And it can continue up like these. I'm fine with that. But if it does this huge wick like this and it stops me out somewhere up here, like a $56 range, for example, like on this particular day, that is like that's a lot of money, right? In terms of if I got $3,000 in it and it goes from $20 to 50 or 55, and I've got 3 grand in each position. I mean, we're talking more than 100%, right? So at least $3,000 gains minimum. So that's kind of my action plan here, right? Like I said, it's going to get to this $30 area. I'm going to take that's 100% for me, right? Or pretty close to it. 32 is 100% because I got it at 1745 is my number. I bought a little bit recently, so 1740 is probably my number right now. But it hits $30, I'm almost 100%. I'm gonna shave off half my position right there, right? And that's 3 accounts. So I got 3 grand. I think it'll probably be around 1200, 1250, maybe 13. Just kind of wild guessing. So you multiply that times 3. That's a significant jump in profits for that whole entire account. All right, and then the rest of it, set a trail and stops. So the way I set trail and stops, I try to look at the price action of the most recent week or two and see um, what's the range. And I try to get an average of that range, and then that will be my trail and stop. So if the average is like a $3 move, so again, it hits 30, I set a $3 trail and stop. Right, so let's just assume for a second that that average range of volatility is $3. So, you know, 7 to 14 days worth of movement. Compile all of it together, divide that number into however many days, and I get my number. So let's assume that it's $3. Hits $30. I set a trail and stop for $3, and I'll wait for it to kind of retrace. Maybe it depends how I feel. But let's just for the ease of understanding how to set trail and stops, I'll set a $3 move at the 30 mark. Hits that. Let's say it only falls to 28. I'm still in it, and then it'll jump. Boom. Let's say it rips to $40 the next day, and then it falls to 37. Now it's going to stop me, and that's a lot more profit for me. That's another $7 move on top of the first half that I already secured the bag on. So That's how I deal with trailing stops. And really, it's like you can be greedy and safe at the same time in the scenario because you want to let it run, but at the same time, you're not trying to be in a position where it falls and then now you're losing money, right? So that's why I love trailing stops. Perfect for this type of thing. So, any questions?
No, not right now. I'll talk to you about something offline later.
Okay. You got something, Jordan?
I'm good.
Okay. Did you guys
No,
have
no,
any?
no. I'm good. I was just gonna acknowledge. No, I appreciate that.
All right, cool. Did you guys have anything you wanted me to talk about? I mean, so I'm going to probably stop the recording now, since this is kind of like the end of my lecture, but I'm happy to stick around. And, if you guys got anything you want to talk about, I'm all ears. So I'm here for another couple hours at least.